Hey, what's going on, everybody? I want to introduce you guys to the Schedule C IRS 1040, the profit or loss, how it's filled out and explained. Get a lot of inquiries about this particular form because a lot of people are self-employed or small business owners, and they ask all the time in regards to filling out the profit or loss for from a business, especially around when they're looking to get any kind of car purchases or home mortgages, being that they're self-employed and don't have any kind of other stated form of income. This is the actual form that a lot of people have inquiries about. And we're going to introduce you to this form with this video and also explain what it's used for, things that can go on it, and how it also transitions back to the IRS Form 1040. Again, right here, you see an example of the IRS Form Schedule C, pretty much profit and loss for a business, the different sections, name, principal business, income section. I'll go over this in a few in regards to different ones, but I just want to kind of give you guys familiarity with it in different sections of the different expenses you can have in relation to it. The main purpose of this form is to report income or loss from a business you operated or a profession you practice in as a sole proprietor. Okay, so you can be a small business, or you can be, actually an individual, just an independent contractor, or somebody just working, for themselves, plumber, electrician, be any kind of doing any speaking, dancing, things like that. This will be the form you use to state your income. Who needs to use this? Again, you'll need to file Schedule C if you earn income through self-employment as sole proprietor or a single member LLC. That's very important because a lot of times people are told to form an LLC or limited liability company, but they don't understand that when you have a true partnership with actually another individual, that's when you will use the form 1065 for LLC. But if you're a single member, single owner LLC, you will use the Schedule C. You wouldn't use the Schedule C to report business income expenses of a C Corp or an S Corporation. Even though you may independently own those by yourself, you wouldn't report the income from a C Corporation, which would be used on the IRS Form 1120, or an S Corporation, subchapter S Corporation, which would be done on a Form 1120S, okay? So this is just specifically used for actual individual, sole proprietor or independent contractor or a single member LLC for the Schedule C. C Corp and the S Corp is not used for this. Very important because a lot of people are impression because they don't know would think they could use this. Some of the items you need to file, you basically need your Social Security, tax ID identification number, or employee identification. We know the tax ID number and employee identification number, pretty much the same thing, just depending on who's asking, in regards to the particular numbers, they are pretty much the same thing. And if you're independent contract, you have an independent contractor or a sole proprietor that has not requested a tax identification number, same thing, we're going the same section was used for. Basic income statement or profit and loss statement, these actual accounting forms to show the actual income activity, income, expenses, the actual net profit that you made for a business during the year. The balance sheet to show the stated net balance that you had for your business as of December 31st of whatever year, and a mileage tracking sheet. Some of your common business expenses you have, almost payroll, that can be employees or freelance help that you paid out, and the expenses, these actual things that the actual company, from an output perspective, that you paid out, bank fees and interest, rent, utilities, insurance expenses, business vehicles, that i.e. business vehicle information, be it actual the interest that you paid on a mortgage for a business, the actual cost, because you can actually depreciate, accelerate depreciation on those assets, or if you did in rentals on a vehicle. Equipment rental, actually if you did purchase it or you did rent in equipment, and software. Again, there are other ones, but these are just some of your most common ones. Right here, guys, we have an example of an IRS form, Schedule C. Let's go through a couple of these sections right quick, guys. You see pretty much the name, proprietor, you have that tax ID number, principal business or profession you have right there, business code. If you on the form, they have a listing of the business code, but you can also kind of do a Google search on different business codes if you can't find yours. In relation to the actual, for the IRS Schedule C form, you can Google and just say, hey, I'm an entertainer, what's the IRS business code? And they'll pop up right there. And most of the time, if you're using kind of software, it'll populate on there. I know we're in the world of a lot of people want to do the tax themselves. and that's fine. But what happens is a lot of times people don't know how that information is translated back into the actual particular forms. Just more Q&A, what goes here, what goes there, but where it goes actually into the forms, into the tax return, a lot of people don't know. So it's very informative just to know that. And who you actually doing, the business name, that's it, Mr. Short Dollar YouTube channel, address right here. Your accounting method, you have to put right there. Cash method. Cash method just means that you're actually doing, your accounting on a calendar year from January 1st through December 31st of each particular year. Accrual method, that means you're actually doing it at different sections. It may be from February, 1 year, February to the next year. It's just whatever opposed to anything outside of a calendar year. We have sometimes in accounting what we call a fiscal period, and that can be the same, and that can be structured at different times. Most of the times your fiscal years will end on I'm about to go blank on one right now. They begin October 1st of each year, end on September 30th, but that's usually a common fiscal year period. But it's just determined, set how you want to determine it. But for common practice, most companies just use your basic cash method, where you based on an actual calendar year. They ask you a question in regards to your material that participate in the company. You check yes, and a couple other background questions from there. Now, right here, they're asking actually the gross revenue that was made for the actual company right here, the 25,650. And right here, guys, you see these different sections in regards to returns and allowances, cost of goods sold, and you actually get that with your gross profit or gross income. I should have had this 25,650 there. I apologize with that, but that should have been right here, that 25,650. That should have been right here on section 7. I apologize, I didn't have that there. But just for explanation purposes, you use different sections for cost of goods sold. That's usually done like in the manufacturing sector, where you may have certain production things that are going on. You may have a number there, but all these other things there will subtract from it and still give you the actual gross income will be from here. But what is on line 1, that will be right here in block 7, 25,650. I apologize about that. Right here in this section right here, we see some of these different expenses that being your advertising will be $1,200. Insurance, $654. Legal expenses, you see these different expenses that are listed here. And you have a section here for other expenses right here. And if you look on this next page, this is page 2. You see that section, we'll talk about cost of goods sold. Well, they look at pretty much what your inventory at the beginning of the year, what you put in purchases, purchases less cost, anything that would add to it, cost of labor, material. These are most, from an accounting standpoint. Guys, I will say this, if you're not really familiar with a lot of these terms, these are sometimes you may want to look at the hiring a bookkeeper during the calendar year for your particular business, for a certain amount of time, or even pay somebody from a consulting standpoint to explain to you exactly how to calculate cost of goods sold. But definitely if you're in your manufacturing or production side of doing things in your business, it behooves you to make sure you have a good idea what cost of goods sold is. And that's just really pretty much if you're selling a particular item, what did it cost you to sell that particular unit? This section 4, right here, information on your vehicle. This is where you will list in vehicle mileage. You can put in the date that was placed in service, the term, then a total number of miles driven, that being business, commuting meaning what you did in your day-to-day job. With doing that, any other kind of mileage you put on there. I forgot, I think IRS just came out with a new mileage rate, what they were giving per mile with it. But that changes sometime from year to year, but IRS upstate that frequently. I will say this, most time when you're using the software, all that stuff will be populated for you, but they will ask you this background information, was the car available, off-duty hours, do you and your spouse have another vehicle, things like that. And depending on what you check on those to determine if the actual mileage expenses can be used for that, by the availability and external use outside of a particular business. And here were some other business expenses that were placed on there, equipment and software, that totaled $6,883 because those sections went on page 1. And then you'll see right here for other expenses, that's at $6,883. Now you have the total of all these in regards to, 8 through 26. That number is added up right here. We got the total expenses, the total expenses that we had, which is $17,539. If you subtract the $25,650 from the $17,539. That totals $111. That right there is your gross profit. And you see right here your net income for your Schedule C. Right here, line 31, that's one of the main things, especially when you look to get any kind of car purchase or home purchase. They're always going to look at line 31. Line 31 is your net profit for the year. Usually, a lot of times, the actual lender will divide that number by 12, and that'll be your actual, average monthly income. So this is the actual total that the bid is made. So if you are self-employed, keep in mind, this is the number that lenders look at in regards to actually how much you made. They will divide that number by 12. And that's where they figure out exactly what your monthly income is. This line 31, okay? Just keep that in mind. And typically when you actually do this is another nugget. When you actually look to purchase a home, they take, if you're self-employed, no W-2 income, they will actually, if they're basing off it, if they'll look at the average of 2 years. So line 31 for 2 years divided by 24, that's where they get that average monthly income. There's something to kind of just keep in mind so you again have an idea of what's going on with your tax and your actual income. What happens is that $8,111, I'm sorry, slow my roll right here. That number we had right here from line 31, it transitions over to Schedule 1. Schedule 1. Here, it's the additional income and adjustments to income. It goes to line number 3, that being business income or loss from the Schedule C right here. And then this is from another form what we have for Schedule E rather, so it is not applicable. But the line 3 plus any other notes of income. And these are different ways that you have income during the year, and it's taken to the Schedule 1. And that total is placed on line number 10 right here. Okay, again, that number from line 31 on your Schedule C, transition to Schedule 1, line number 3. Ask any other totals we have here. And then next, that number goes to the Schedule C, to your 1040. Right here on your 1040, that number goes to line number 8, or line number 8, and that comes from Schedule 1, line 10. Back here, Schedule 1, line 10, $10,104. Again, disregard this for explanation purpose because we are going through the whole series of the different tax forms, so that's why we have a number there when we do the form for the Schedule E, talk about rental income. That's where this number is coming from, so disregard it, but just know that those two, the total of those two is $10,104, and that transitions over here to line number 8 of the income from Schedule 1, line 10, right there. And that's where it transitions over. So if you do have any self-employment income, we use the Schedule C. That's how the income is disseminated through the different forms in regards to that. So even when you're looking at it, and someone is asking you for particular tax forms, you have a good idea of knowing where that information transitions to in respect to the different forms that you may have to use, being the Schedule C, going over to your Schedule 1, and then finally flowing to your 1040, okay? Again, guys, I am Deonte Burden, aka Mr. Short Dollar himself. Make sure you subscribe to the Mr. Short Dollar YouTube channel, where we talk about personal finance, entrepreneurship, real estate investing, and business. To stay updated with all the great information we currently have on the channel and all the great information that's coming down the pipe. So just make sure you subscribe to the channel by hitting that $ in the bottom right-hand corner. And also make sure you hit the bell to get a notification each time we upload a new video. Take care of yourself, guys, and best of luck.